All right, let's go. So, hi everyone. My name is Frank Devin. I'm one of the True Global Ventures partners. Welcome to our fifth TGV podcast, where we'll be speaking about the impact of Bitcoin halving and its impact on Animoca brands with the chairman of Animoca brands, Yat Siu. Thank you, Yat, for joining and making that possible. So to keep the TGV spirit, we will take questions from the chat. So for the audience, do not hesitate to ask your questions. I'll pick up some at the end of the session or during the session. And to keep the dynamic, let's take short question. And yet, please give short and sharp answers to that.
No problem.
So
No
so
problem.
maybe the first question, I go for the first one and then go through the list I received because I receive actually a lot of questions. The first part will be dedicated to Bitcoin and be a little bit more technical on what the halving has as an impact on Bitcoin. And then the second part, because I receive a lot of questions, would be also on the impact of this halving in the result and in the Animoca brand work with that Bitcoin halving. So let's go. So how could you maybe sum up for we're not all completely geek and nerds about the Bitcoin halving. Can you explain a little bit what is currently happening?
Well, okay. I mean, I think the straightforward thing is that, Bitcoin halving basically means that the amount that miners are able to generate basically just went half in value, basically. So now we're basically gone to a point where, basically the amount of value of Bitcoin that people are basically mining is roughly around, I think the exact number is, I think it's 425 or something like that. Basically a Bitcoin and sort of that you can mine on a daily basis. And I think this is one of those things where, the thesis, and again, we can discuss this later, but the thesis is that every time the supply is cut through what they call the halving, there's less supply in the market, which means there's some people translate as the equivalent of selling pressure, because the translation is to say that it's basically like saying that there's basically $8 billion less of Bitcoin available as a result of that, right? And so it has a number of consequences. It obviously means that miners have to work harder for their rewards, which has some implications we can discuss later. But on the other hand, also supposed to mean more scarcity in the ecosystem. And I think for most people who don't realize, most of the Bitcoin is already mined, right? And there's a fixed limit of 21 million. So it'll keep having basically for that to a point where, and that's, by the way, one of the reasons that we can discuss as well, why people believe that Bitcoin will be worth millions and millions of dollars because of the fact that they say, well, there's going to be less and less and less Bitcoin that's going to be mineable, and therefore, in order to defend the network, the value of Bitcoin will have to keep increasing. But again, happy to discuss the consequences in this, but that's the some of it. Yeah.
Yeah, notably, since the 10th of January with the ETF, there is a combination of scarcity in the supply chain and huge pressure on the demand side. So that we would expect from that at some point, the market is expecting that to have an impact on the price itself of the Bitcoin. How do you see that coming?
Yeah. So first of all, I mean, Hong Kong had just approved Bitcoin spot ETF as well as an Ethereum ETF, which I think is interesting. It was basically subject to certain approvals, but anyway, that's going to be quite fascinating. And to us, I think Bitcoin spot ETF drove this current bull market cycle, right? Basically the US obviously approving that, which is a really, really big deal. But of course, what you should also expect is that every other major financial center in the world, not just Hong Kong, Singapore, Tokyo, London, Frankfurt, like all these places, they're all going to have Bitcoin spot ETFs, which means there's going to be more buying pressure for Bitcoin. And the reality, as I see it, is that the price reflection of Bitcoin, I think, is some people speculate that the halving is going to increase the value of Bitcoin, but I think the Bitcoin spot ETF and its subsequent launches are going to actually be much more bigger drivers of short to midterm value for Bitcoin than the halving in itself.
Yeah, so you were naming a couple of different places across the globe. Is it putting a pressure also on the regulation itself worldwide? So you were notably talking about Hong Kong that has validated the ETF, the Bitcoin one. So do you think that this is also the scarcity, but also the fact that there is a pressure in demand is then moving the needle in terms of regulations across the globe?
Absolutely. I mean, okay, so first of all, we have to look at the US as a bit of an exception, given everything that's going on at the SEC still. And that, by the way, our view is that the policies will change post-election, because obviously post-election there's going to be a number of changes. And I think the key figure that everyone's going to look at is basically what will happen to Gary Gensler, right? Because obviously he's the key voice around, sort of the current, I guess, SEC sentiment around blockchain broadly, crypto broadly. But generally speaking, it forces many of the countries around the world basically to look at regulation in the more positive way. And I think crypto really covers two, from a macro standpoint, covers a number of narratives. And I think two of the major narratives. The first one is a financial inclusion youth narrative, right? So in other words, for many places, they look at crypto and Bitcoin adoption, basically just that whole Web3 ecosystem as a way of how do you sort of create opportunity for the youth, right? And so you see in places around the world where they focus on that, it's because how do you engage the young people, right? Because for older people, they already have their assets, they have their real estate, they have whatever. What's the wealth class in which they can participate in? So that's one narrative. And this, by the way, is really playing out in places like the Philippines, for instance, or in certain places like in Latin America, so some countries, right? So that's one area where that's basically pushing that. But the other one is that in other countries, particularly the more conservative ones, regulators want to play it safe. And so if the US says this is how to do it, then people go, oh, if the US is okay with it, then maybe we can be okay with it too, right? Which is what basically a lot of people are doing. So consequently, I think you should expect to see a lot more Bitcoin spot ETF emerging even in the smaller markets, because of course the local financial players want to partake in that opportunity as well. Holding Bitcoin as a basically ETF is a very, very easy business in relative sense, right? You don't even have to deal with market volatility in and of itself. You basically buy Bitcoin and store it, and that becomes your ETF, right? And so that in and of itself seems to be an attractive business because it's low, basically relatively low cost to maintain. And finally, I think, from a demand standpoint, family offices around the world do want to have an exposure to this asset class. And it's really difficult to do that when you have to hold self-custody. Like everyone here might be like, well, I can buy some Bitcoin and I can basically store it in, like my ledger, okay, for instance, right? But most capital asset allocators are not comfortable with this because it's not their own money. Even if it's a family office, it's run professionally by some people who then have to sort of be accountable for that, right? And then they say, okay, well, I hold the sort of Bitcoin in an exchange, but then can you trust the exchange, even if they're regulated? Remember, the news cycles in the last few years for exchanges has not been good, right? So spot ETF, basically a BlackRock or a VanEck or basically, sort of these big firms say, we'll manage your Bitcoin. You won't lose your job for saying, I paid, I put money in a BlackRock ETF, right? But you will lose your job. You said, I bought Bitcoin and put it in a ledger and oops, I lost the wallet. I mean, whatever, right? Like the point is basically that it's insurance for those people. So I think family office money will pour into this alternative digital asset class through spot ETF around the world in bigger numbers as it rolls out.
Yeah, and then so that's for Bitcoin, and then there is a kind of I received some question about the how it is impacting then all the other altcoin,
Yes.
and
Yes.
so you're part of it. So can
Yeah.
you elaborate
So
on
there's
that?
basically, yeah, so there's multiple categories. First, I think we're still in what I like to call sort of the gold standard of Web3, right? And the gold standard is Bitcoin in Web3, right? So, in fact, when you think about, pre-Nixon, basically, the US was gold standard dollars, right? And no, after they abandoned that, we went to a new kind of era of basically sort of economics. And I think right now with Web3, Bitcoin is that sort of layer. And it comes partially because the wealth that's generated in Bitcoin flows into investment capital and other type of token ecosystems, basically in the rest of Web3, which is basically somewhat followed by Ethereum, but then basically the rest of the ecosystem benefits because essentially, if the value of gold goes up, the economy goes up, the underlying ecosystem sort of improves. Plus, Bitcoin is also a leverageable asset, right? So people who have Bitcoin, they can actually get something like up to 70 to 80% collateral on their Bitcoin in traditional financial institutions. So again, it sort of opens up that. And what tends to happen is that when you make money in Web3 or basically with crypto, you tend to invest in more crypto because the yields and returns in this cycle are higher, right? So it's very unlikely that someone is going to be basically buying sort of selling their Bitcoin or collateralizing their Bitcoin so that they can basically buy T-bills, right? That's a stablecoin business, right? That's what Tether obviously does because they're holding stablecoins, but that's not what your traditional financial asset allocator is doing when they buy Bitcoin, right? They buy Bitcoin to hold Bitcoin and to leverage the Bitcoin to buy more digital assets, right? So that creates essentially that flywheel that basically translates into the rest of the ecosystem. So we've seen a broad increase, right? Basically the entire token market caps are now almost 2.7, $2.6 trillion, of which a little bit more than half is Bitcoin, which basically means the entire ecosystem has also risen alongside Bitcoin. Maybe not as much when it comes to the L1, L2s, but ranging from basically utility tokens to meme coins to everything. Basically, the entire ecosystem as an economy has basically gone up. So that we should continue to see that expectation over time. But I think the other thing is that after the Hong Kong's launch of the Ethereum spot ETF, you should expect Ethereum spot ETF to launch in different countries around the world, which then also will create different levels of demand in that area. And CF Benchmarks basically, with the Harvest Fund basically created a GameFi index. Okay, so the GameFi index is now actually quoted on Bloomberg, but it's obviously an index. It's not financified yet. But basically, by creating a quotation of it, you're opening up the beginning of a potential, for instance, GameFi token ETF, right? And when you basically reach the type of liquidity that many of these tokens have, making them an ETF may not actually seem that crazy, right? So I expect many more tokens to launch as ETFs, which then basically brings in more capital, which basically will grow the Web3 ecosystem because essentially TradFi money can start putting money into Web3 through that exposure mechanism.
That's actually a good transition with the next topic, and to make a joke, a little bit of joke here. I received a question that I like. So how did you manage yet to have Bitcoin halving exactly when you published amazing Animoca brand results? How did you make it?
Serendipity. Or maybe you can call it fate, or maybe you call it synchronicity. I don't know what you call it. What I can tell you is that I did not plan this. Our financials were going to be reported for the end of March, right? It's normal, quarter end. Okay. So the fact that it takes us about 2 weeks to, basically put out the announcement is, if you think about it, normal, right? Right. So the fact that we announced it at the same time, maybe the divine gods decided that, we had a synchronicity event. So that's all I can say about that.
So maybe you can elaborate a little bit more on your own results and with this perspective of saying how this Bitcoin halving will affect at some point Animoca as a company. And I know that you have
Right.
one of your big
So
projects
first of
coming
all,
that will use Bitcoin as a chain.
yeah. So first, we do not believe that Bitcoin halving in and of itself has an impact on price. As I said, the impact on price and the growth of the ecosystem, we think will be driven more by utility. So things like ordinals and inscriptions and runes recently on Bitcoin. I think that activity will create more demand and activity in the space. Plus, of course, institutional interest with more spot ETF and more demand for Bitcoin. I think those are going to be more value drivers. Like we don't necessarily buy the argument that some people say that the halving is the equivalent of an increase in demand because it's less Bitcoin. But that presumes that basically people are buying Bitcoin at some kind of equal rate, which no, they're holding it, right? But at the moment in time, like we think of it, narratively speaking, is much more around sort of demand from external factors than necessarily demand of the halving. Because the other way to look at it is that when you go from basically the current numbers of Bitcoin, really we're talking about a reduction of 400 Bitcoin plus 425 Bitcoin. You're not going from a reduction of 40,000 Bitcoin or 20,000 Bitcoin. So those previous halving numbers basically would have had more of an impact. So we don't think that makes an impact. I think the real impact for the halving, I like to call it Christmas, as in it's a tradition. Every time the halving happens, we talk about it. The press talks about it. The traditional media talks about it. My mom talks about it. Right? Okay, right? So what happens when the halving comes out? We create a tradition, and later, when the next halving comes, we'll have the same tradition. And for weeks, the whole world will talk about the halving again. And we have theories. Price go up. Basically maybe it goes down. Basically sell the news. Like I don't really know. I don't really care because actually it keeps the narrative of Bitcoin alive, right? The tradition. Now it's become such a legend that everyone will talk about. Let's call it, I like to call it the myth of the halving. Not because the halving isn't a myth, it's a fact, but it's mythology at this point. Like Satoshi is mythology too, right? We've created our own lore, and that ensures that we will always have a story to tell. If people forget about Bitcoin, they won't, because it's always going to be halving, right? So like how we never forget Christmas and the traditions around Easter, because we will always talk about it, or Hanukkah, name your tradition, right? So to me, that's actually the meaning, to keep it at sort of to keep it relevant in the zeitgeist of basically generations, rather than specifically about the value. The value conversation to me is just the theories we like to talk about, the fact that when the tradition comes, right? So it's like we like to think about it. I like to think about it like Christmas because it's a gift.
So talking about the gift, is there in the Bitcoin Christmas trees any ordinals that could be
Yes.
the gift of this Christmas?
Well, I mean, I think the gift, frankly speaking, for miners anyway, and for the Bitcoin ecosystem, I think this having the gift is runes, right? Right. I mean, Ordinals was last year's gift. Runes is this year's gift, right? And I think this driver of innovation, to me, also, by the way, is how I think Bitcoin is ultimately going to continue to maintain its consensus mechanism, because miners now make about 20% of their fees from Ordinals. And in time, what's going to happen is that even more of their fees are going to come from ordinals and runes and so on, which, by the way, is one of the reasons why Bitcoin maxis don't like it, because they feel that it's congesting the network. But actually, that's the only way in which you can accrue value into Bitcoin. In the same way that ERC 721s, as in with NFTs, when they first launched on Ethereum, actually created a reason to have scaling solutions and a reason to expand the ecosystem. Because I think in the past, before ordinals, most Bitcoin people hold it. That's all they did, right? They held it. It was literally digital gold. They didn't use it. But the next level of basically sort of costs or transactions, or in this case, mining fees, need to be generated from a different form of transaction. And that's not going to be just price go up. It's going to have to come from utility. And that's runes, ordinals, inscriptions, that type of stuff.
So before maybe explaining in particular Darwise and what you're preparing, but just please explain the runes for everyone. I'm not sure everyone is completely updated on ordinals and runes.
Well, okay. I mean, in a nutshell, you can think of runes basically like you can think of runes essentially as a way of creating sort of, I guess, ERC20 like equivalents, basically, but on Bitcoin. That's what this is, right? But when you think of the meta, for those of you who are familiar with what's happened with Solana or Ethereum, the fact that you had ERC20s on Ethereum is actually what drove transaction fees and utility on Ethereum, right? Whether it's Sand token or ApeCoin or so on, or Doge or SHIB, right? Like, your meme coins, doesn't matter. The liquidity and the volume and the velocity of that liquidity that it created is what essentially made the utility and the value of Ethereum as large as it was, and therefore sort of became the underpinnings of a bigger ecosystem as a result, right? And in fact, Solana's value and its TVL creation really is primarily because of meme coins. If meme coins didn't launch on Solana, Solana would not reach the levels that it has today, and it's also driving utility on things like Base and everything like that as well, right? So basically, Runes is following a similar playbook, but it's just doing it on the Bitcoin ecosystem, which means that just like basically it's costing more gas on Ethereum, it's basically creating more mining fees and more transaction costs and more load on the Bitcoin network, right? And I think in this case, because it's using directly the Bitcoin network, it's creating essentially, more friction. I mean, more load, but therefore also more fees, right? But yes, it's you can think of it as like the ERC-20s of Bitcoin.
But does it mean that you will have at some point for each of the gaming app or that you are launching that you're
Yes.
gonna select one or the other chain
Yeah,
or
so the B Life token from Darewise is going to be our initial sort of, I guess, Bitcoin direct play. We're invested in a number of Bitcoin projects, by the way, so that's not the only one, but the one that we're directly launching. And the way that you could think of Darewise, as in with the B Life or Beyond Life token, is a little bit. It's beyond that. It's an ecosystem token. Is basically more like kind of the way that we launch Sandbox. You could think for basically the EVM and the sort of, I guess, more traditionally historical native Web3 audiences. Basically, Bitcoin is sort of Darewise Beyond Life is basically like our Bitcoin version of that. And for those of you who don't know, like the Sparks token, for instance, the Sparks, which is basically one of the early sort of ordinals it launches, I think has a floor price of close to 1 Bitcoin, making it one of the most expensive, I guess, NFTs in the world as well, right? So it's done really, really well. It's also interesting, just like Sandbox is a French team, totally coincidental, by the way. That was not by design, right? But again, I guess the French know something about NFTs and metaverse. And Bitcoin is at the end of the day, when it comes in terms of liquidity and value and awareness, the largest Web3 ecosystem in terms of value. So it does make sense to do that. But it's also true that a number of our other projects will also be looking to leverage basically the Bitcoin ecosystem, either directly or indirectly. Like in a portfolio, like people like Yuga Labs, for instance, basically sort of did an ordinals collection, even though they're primarily an Ethereum-based one, right? And then some of our other portfolios, like on-chain monkeys, actually completely moved to Bitcoin. They basically moved their collection entirely from Ethereum to Bitcoin, and they received a lot more value because of that. And I think of it a little bit like immigration of nations, right? So, maybe if your business is not doing that well in, I don't know, let's call it Switzerland, then you can immigrate to America and run your business there, which is basically kind of what some people are doing when they move from sort of EVM to Bitcoin. But again, it's not for everyone.
yeah, and I think there is a question from the chat, and I will take the second part of the question, which make the link with what you just said. How do you view the potential implication of the halving on investment strategies within the blockchain gaming industry?
So first of all, as I said earlier, because Bitcoin is kind of like the gold standard for Web3 for now, the more Bitcoin rises in value, the more liquidity enters the market. The more liquidity enters the market, the more investing capacity is possible in Web3. In the Web3 paradigm, every Web3 user is kind of also an investor, a true Web3 user, right? If you're a token holder, whether you're a speculator, whether you're a gambler, whether you're whatever, right? Whether you're institutional, you're still investing, right? In some form or fashion, right? And in Web3, every user is an investor, which is again a different paradigm, right? Like in traditional VC, because normally when you think of those type of investors, you might think of a stock exchange and Nasdaq or NYSE. But normally on Nasdaq and NYC, you can't actually invest in startups, right? That happens much later. So usually that funnel only exists in the VC sort of exposure. And so the capital flow is actually quite compressed when you think about how much VCs are deploying for startups that eventually go, for instance, eventually go IPO. But in Web3, the Web3 user, through holding tokens, even and NFTs, even though they're not thinking of it purely as an investor, effectively have an investing effect, right? And so for instance, when people make money on meme coins, right, which also comes because it creates liquidity in the market. But when it creates liquidity in the market, then what do? Well, they don't necessarily go and buy themselves a Prada or Gucci. They go buy themselves a Bored Ape because that's their digital status because of their digital income. They might buy a Gucci and they might buy a house too, but they'll definitely buy a digital asset. because it's their status symbol in Web3. And so again, and again, I'm not making the same comparison, but there's a reason why you have all the luxury stores outside of the, Sands Casino. Because the people who won in the casino can then go through the mall and hopefully they'll buy something on their way out, right? That's basically what cultural digital items represent as NFTs or ordinals or inscriptions in Web3 as well. So yes, the Web3 gaming segment will therefore also increase as everything else will do. In fact, gaming has been one of the biggest beneficiaries, right? That's basically the next largest narrative after Bitcoin when it comes to, are the results we've seen with Pixels or Mavia or Zai or even our own Mochaverse.
Yeah, so there is some questions about that that I receive, and notably the kind of correlation between, or the uncorrelation, depending on where we look at that, between the Sand token and the Bitcoin, which are somewhere not related to the project itself. So how do you see that moving from I
Right.
mean, the
Yeah.
mindset, the positive mindset on the market that could
Sure.
have an
Yeah.
impact?
So, so first, when you think, so the way we think of tokens is we think that they are representation of network effects. So that's the first principle, right? So they're capital assets, but they represent network effects. They don't represent equity. Like equity represents the value that the company will generate. Tokens represent the network effects of its utility on top of its financial utility, right? So that's kind of how to look at that. And so the financial utility increases when liquidity increases broadly. So you will have noticed for Sand token, even if the price did not increase as much as other tokens, the liquidity has improved, right? So 1 year ago, Sand tokens might have traded below $50 million sometimes, whereas now Sand token will trade $100 to $200 million. So you can already see the liquidity effect happening. Now, that doesn't mean there's value yet, but there's liquidity. And we also think liquidity has a bigger premium than value, right? Because if something's liquid, then it's a true currency. If it's not liquid, then honestly, it doesn't really matter how valuable it is because you can't do anything with it, right? So that's kind of the first component. Once liquidity forms, then it's possible for the token value to increase because remember, with Sand tokens, you have a lot more Sand tokens in circulation than the other projects. So I would argue that the Sand token is much more on, and sort of, let's call it more of a level that is closer to, I guess, its realistic level on a token market cap, circulating token market cap level, because so many more tokens are in circulation. Because it's effectively the same as saying you've diluted the ecosystem, right? When only 10% of the Sand tokens are in circulation, right? The FTV is very high, but the circulating market cap might have been similar or maybe even smaller, right? But its circulating market cap is actually quite strong relative to this liquidity, relative to the fact that the market has a certain size. Now, how do you improve that? I think Bitcoin creates the liquidity in terms of higher prices, but actually for people to hold it as a long-term investment relates to, or long-term, let's say, sort of belief, relates to the sort of formation of its own network effects or the value of those network effects, right? And so for Sandbox, because they haven't launched the game fully yet, right? It's the potential of the future launch. Its network effects haven't been able to form fully yet, right? Once the game is running the whole time, then I think network effects can form more broadly. Because again, when I say a token represents a network effect, it's another way of saying that a token represents attention, right? So in Web3, basically attention is the premium. Actually, in digital, attention is the premium, right? Even when we think about TikTok, Instagram, Facebook, every social network, what are we looking for? Attention, right? And so when people look at rising NFT like Mochaverse, which has gone from 0 to 4.4 ETH, and the reason it got its value is its network effect, meaning it has attention, right? So when something, and so for Animoca as well, it has attention, for instance, when we say something, right? And so a product has to run the whole time. And even the token is up. If the product isn't running, the attention might be more limiting. So I think the correlation for Sandbox is an increase in liquidity, not an increase in value. The increase in value will come when the attention basically runs more deep, which comes from the game launching. So I think that's the correlation that I think we should be looking for in terms of Sandbox. And now I think some of the strategies for Sand has been around, when they're going to finally launch the DAO, is that Sand token can be used in other games or can be used in other utilities, which means more attention. And when that happens, then the Sand token will probably increase as well. Because right now, most people think of Sandbox, Sand token, as just the token for Sand, Sandbox the game, or Sandbox Metaverse, which actually it can far beyond extend that if we wanted to, which is what part of the plan.
Okay, I know that we are running out of time now. Just maybe one word or one conclusion on a number that you will us to remember on the Animoca financial results. Just one thing to remember about Animoca.
Well, I mean, one thing to remember about Animoca, first, Animoca as a company has always has its mission talked about basically delivering true digital property rights. That's our mission, right? But of course, one other way I would think of Animoca is we've basically become, although that's not our goal, a kind of proxy for Web3. And one of the reasons we released our financials is $291 million of cash, and on a combined basis, both off and on balance sheet, over $2.4 billion of tokens, many of them very, very liquid, the majority actually being highly liquid, right? To us was to demonstrate that it's not just the price of Bitcoin that's doing well, but that businesses like ours in Web3 are doing well. I mean, we added $100 million of cash basically since a year ago, right? I mean, that can be said for a lot of businesses from 2023, right? It also shows that I think we can manage the very volatile environments of Web3, I think, better than most, right? And so in some ways, it's like saying, you can buy Bitcoin, but you can also buy Animoca as a broad proxy of your exposure into Web3. So that's kind of one of the things that we want people to I guess know about. And of course, the Mochaverse is going to be one of the key ways in which we again will create more network effects and therefore more attention on what we do.
Okay, thank you very much. We're now at the end of this podcast. Thank you so much, Yat, for coming and explaining your views and perspective on this, from the Bitcoin halving to the extremely good results of Animoca brands. Thank you so much.
Thank you so much. Thank you so much.
Bye bye. Thank you. Bye bye, everyone.